All right, welcome. Today, we're going to open up the financial toolbox and really demystify the world of bank accounts. Our goal here is to make sure you know exactly which tools to use for your money and for your goals.
So let's just start with a really simple question. Is your money actually in the right place? I mean, are you positive you're using the best accounts to manage your day-to-day life, to save for what's next, and to really grow your wealth? Well, let's find out.
So, here's how we're going to break it all down. First, we're going to frame this whole thing as building your own financial toolkit. Then, we'll look at the tools you need for daily spending, the ones for saving and growing your money, and even some for more specialized goals. And don't worry, we'll wrap it all up with a simple guide for choosing the right tool for you.
Okay, let's really lean into this core idea. I want you to think about your bank accounts not just as these places where your money sits, but as a complete toolkit. You wouldn't use a screwdriver to hammer a nail, right? The exact same principle applies here. It's all about matching the right account to the right financial job.
And this really puts you in the driver's seat. You are the builder, the architect of your own financial future. And these accounts, these are the tools you're going to use to build it. Just knowing what each one does is the very first step to building something solid.
First up, let's pull out the most essential and probably the most frequently used tool from our kit. This is the one you're going to rely on for your day-to-day life.
And that tool is the current account, or as you probably know it, a checking account. Its entire purpose, its reason for being, is to be the central hub for all your daily financial activity. We're talking money coming in from your paycheck and money going right back out for bills, groceries, you name it.
So what's the trade-off here? Well, with a current account, you get amazing flexibility. You've got your debit cards, super easy transfers, constant access to your cash. But, and this is a big but, you're sacrificing growth. These accounts typically earn little, if any, interest. Just think of it as the workhorse for all your daily transactions, not the racehorse for building wealth.
Okay, so we've got our daily spending covered. Check. But what about making your money actually work for you? Now it's time to explore the growth tools in our financial kit.
And here's the big difference in a nutshell. A current account is all about flow, money coming in, money going out. A savings account, on the other hand, is built for one thing, growth. It's really that simple. One's for spending, the other is for stacking up cash and earning some interest.
But savings isn't just one tool, it's a whole category of them. You've got your standard savings account, which is perfect for an emergency fund because you can get your cash pretty easily. Then there's a fixed deposit, which gives you a higher guaranteed interest rate, but you have to be willing to lock your money away for a bit. And you've also got money market accounts, which can offer even better rates, especially if you have a larger balance, while still giving you some access. The key word here is liquidity, which is really just a fancy way of saying how fast you can get your hands on your cash. It's all about balancing how much interest you can earn versus how easily you can access that money.
Let's zoom in on that trade-off for a second. A fixed deposit is all about predictability. You lock in your funds for a set term, you know the rate, and you know exactly what you're going to get at the end. A money market account is a bit more dynamic. The rates can change, but they're often more competitive, though you usually need a bigger balance to get in. It's really for when you want your cash to work harder for you without being completely locked down.
Okay, we've covered the tools for everyday use and for general saving. Now let's get to the fun stuff, the power tools. These are accounts designed for very specific and often very powerful financial goals. When we start talking about some serious long-term wealth building, we have to step into the world of investing. And that comes with a fundamental truth you have to accept. The goal is to grow your wealth, but the reality is that markets go up and they go down.
And your ticket into that world, it's an investment account. This is your gateway to the financial markets. It is not for your emergency fund. This is the vehicle you use to buy assets like stocks and bonds that have the potential for much greater growth over the long run.
Now this is a whole different ballgame. We're stepping away from those guaranteed returns we just talked about. The value of an investment account can and will fluctuate with the market, which is exactly why it's a tool for the long haul. You can be hands-on and manage it yourself, or you can have a professional help you out. The key is to give your money time to grow and ride out any of that market turbulence.
Okay, let's shift gears and look at another power tool, but this one's for the pros, for the business owners out there. A business account is engineered from the ground up to handle the unique financial flow of running a company, and crucially, keeping it separate from your personal money.
And these features are what make them so different. I mean, can you imagine trying to process payroll or take credit card payments from your personal account? It would be a total nightmare, right? Business accounts are built specifically to handle these complex jobs, which makes them an absolutely essential tool for any entrepreneur.
And for the last tool in our kit, we've got something really special. This one is all about building great habits for the next generation. A junior account is actually less about earning huge interest and way more about education, teaching young people the powerful, life-changing habit of saving money.
And you can see how they're designed for this, right? The low minimum deposits mean you can start with just a little bit of allowance money. They often come with cool resources to help kids learn about finance, and yeah, there's sometimes withdrawal restrictions, but that's there to teach a super valuable lesson, the power of letting your money sit and grow over time.
Phew, okay, so we have officially unpacked the entire financial toolkit. We've seen a lot, but how in the world do you pick the right one for your situation? Let's end this with a super simple, actionable framework to help you decide.
Honestly, it just boils down to these 3 simple steps. 1. Name your goal. What is this money actually for? 2. Define your timeline. When are you going to need it? This tells you how much liquidity or access you need. And 3. With your goal and timeline crystal clear, you just match them to the account whose features fit the job. Paying bills? Current account. Saving for a down payment in 3 years? Maybe a fixed deposit. See, it's just a logical process.
And there you have it. The tools are all laid out, from the everyday hammer of a current account to the long-term power drill of an investment account. Your financial toolkit is officially ready to go. So the only question left is, what will you build first?